Hello, everybody. Welcome to my channel. My name is Michael Duke, and this is the show where I talk about stocks that I think are interesting, among other things. It's been a few weeks since I made a video. I've been enjoying the holidays with my family. You may also notice that I have a different setup around me, new fancy things in my studio. Shout out to my wife for helping me get set up a little bit more um, and getting a higher production value out of these videos. But anyways, yeah, I'm back in the fold here, making new content for you in the new year. Had a pretty good year last year in the markets. The S&P 500, second straight year, up above 20%. It's been a while since that's happened, folks. Uh, if you're like me and you're a reversion to the mean type of thinker, you believe that the next few years might be a little bit more choppy, especially with President elect Trump coming in and causing a lot of volatility in the markets, whether that be between tariffs or the threat of tariffs. Um, the bond market is pricing higher inflation as a result of that. Um, you see that with interest rates coming up despite the funds rate coming down from the Fed. It's going to be an interesting couple of years. So I am on the hunt for investments, not just stocks, investments that still provide growth potential, uh, but uh, ideally a margin of safety in this environment. If you're interested in content about the financial markets, about stocks, uh, and find this type of thing interesting, then please consider liking this video, subscribing to my channel, and giving me a shout below in the comment section. Today, I'm going to be talking about a company called Corteva, ticker CTVA. Super, super interesting. In fact, um, this is kind of a sequel video to a video I made a few weeks back about a company called Nutrien. It's been one of my best performing videos uh, and seen a very, very good reception talking about Nutrien. This company here is similar for several reasons. We'll go into that. So, as always, I'm going to describe the company, give an overview, description, talk about the history. I'm going to talk about if it has a moat or not, and what's the narrative that's driving the price, or maybe there isn't one. I'm going to analyze the financials, take a look at the valuation, take a look at the dividend if there is one. This one has a dividend. In fact, usually I'm looking at dividend stocks. I'm going to talk about the risks. I'm going to give it a grade, buy, sell, or hold, and then I'm going to do some crude technical analysis. But without further ado, let's get into Corteva. Let's have the Corteva talk. What is Corteva? Corteva has only been trading as a standalone company since 2019. It was actually spun out of Dow DuPont. Here in the Morningstar report, we see Corteva is an agriculture pure play. It was formed in 2019 when it was spun out of Dow DuPont. The company is a global leader in seeds and crop protection products. Controversy alert with this company. They produce genetically modified farm products and pesticides, herbicides. Certain investors out there might not like that, might not ever consider investing in a company like this. In fact, the ESG risk, 2 out of 5, it's not good. And we'll see why here in a moment. But anyways, seeds generated around 60% of profits in 2023, the remaining 40% coming from crop protection. So what does this company do? Major supplier of farm inputs. It's the intellectual property around the hybridized, the genetically modified seeds. Those are intangible assets. right? Stemming from research and development. So companies like this, they're kind of like pharmaceutical companies. They plow a bunch of money into developing innovative products, really with the goal here of this particular company. The vision is a more secure food supply. I'm going to get personal with my investing philosophy for a moment. I really do not like investing in pharmaceutical companies for ethical reasons. I don't have that same mental hurdle with this company and companies like this. Just know that there's kind of a similar strategy here whereby these companies need to continue to plow money into research and development in order to continue to innovate and continue to create more intangible equity, brand equity. Corteva develops its pipeline through the investment around 8% of sales in research and development. New products should generate sales and profit growth, even as patents expire generic products. Does this company have a moat? Well, common sense would dictate that if their seed products have a strong market share, that they should, right? Um, Depending on what the patent life is on those types of products, I would say that a company like this should have a wide moat, assuming they have strong market share. We see here Corteva's market share in seeds is second to Bayer, otherwise Monsanto. Firm holds a solid portfolio of proprietary, genetically modified, and hybrid seed platforms. Here's the value add on GMO seeds, regardless of your ethical concerns that you may or may not have. GMO seeds make crops resistant to damaging insects while also allowing farmers to spray more efficient crop chemicals to control weeds. Anti-GMO consumer sentiment may limit Corteva's growth in developed markets such as Europe. However, the need to improve crop yields globally should lead to eventual GMO adoption in emerging markets, particularly throughout Asia, where we see long-term growth potential. So that's 60% of sales, or excuse me, profits. The remaining comes from the crop protection, which is insecticides, herbicides, and this other segment, biologicals. Biologicals are natural crop protection products. They're a little bit more ESG friendly. Yeah, we see here, this is their crop protection, biologicals business. They're not very specific if you're not super familiar with this subject matter, like me. Um, just know there's some pretty sophisticated science wrapped up in this business. The growth driver in crop protection is the biologicals market. Okay. So they've got that going for them. However, with this company, it is the seed business. The seed business drives the moat. We're going to lean on Morningstar to help us explain the moat. We award Corteva a wide economic moat rating based on the intangible asset moat source as a result of its portfolio of patented biotech seeds and crop chemicals. This is our friend Seth Goldstein at Morningstar. He also wrote the report on Nutrien that we covered. Companies' patented products command pricing power as they protect farmer yields and reduce other expenses such as insecticides. Pretty easy to see though. Without getting too into the weeds of the technology, this company has a wide moat around this seed business. You can see why. If you're a farmer, your goal is to maximize the yield so you can maximize profits. Depending on what you're going to grow in a particular year, annual, perennial, whatever. I'm not a farmer, you can probably tell by my explanation. If you've bought in a certain seed before, your yields were higher, and that also allowed you to not have to spend as much money on insecticides, herbicides, whatever, because the seed itself had engineered properties that made it resistant to disease and you made a lot of money in that particular year, you'd probably go back. That's the moat source for this company. So, super interesting company. It's going to become pretty clear why I like this company here in a moment. But let's talk about the sentiment around the company. The way that we visualize that is through the price. Look at this chart. Corteva price return versus S&P 500. Yes, it has underperformed over the 3 years, but look at this. This is the bear market right here. The inflation shock. This is really sexy looking to me. Really sexy looking. Will this happen in the future? Who knows? Really sexy to see the price trade countercyclically to the broader market. And while it did, kind of sell off from here to here, it's been in an uptrend. Let's look at total return instead. Also, again, I'm going to add Nutrien. Nutrien was a company I covered a few weeks ago. It's a similar type of stock with a similar correlation. You can see here by the performance. What is interesting about the Corteva price performance, the total performance, is that it has essentially market performed. It's underperformed a little bit. But just like Nutrien, it offered a lot of shelter in the bear market, but performed much better than Nutrien did. What's driving this? Well, it's a farm input producer. These stocks do well in inflation. They did last time. Please watch the video on Nutrien so you get some context on this. Corteva is in that similar vein. However, it objectively has performed much better than Nutrien stock. So is it conceivable to think that in an environment where inflationary pressure ticks back up, that Corteva outperforms again? Not the craziest idea. You see here, Nutrien's performed really well the last 5 trading days. You see here, noticeable tick up. Both these stocks, Nutrien and Corteva, are correlated to each other. So if you enjoyed my video on Nutrien, you should enjoy this. What's driving the price? It's unclear for Corteva. Unclear, but very, very interesting stock. It has the bear market outperform properties that I like to see. However, it has performed very well since IPO or since it was spun off. The underlying company's performing. Let's look at the valuation, the financials. As we always do, we look at the income statement. Remember, this company was spun off in 2019. So these other numbers are pre-spin-off. But let's just look at the 5 years starting with 2019, from 13.8 billion to 16.6 billion. It's like 20% growth. 20%, 5.5 billion of gross profit to 7.2. It's a little bit faster, I think. 1.7 over that. 1.7. It's a little bit better, but roughly about the same. Operating income, 1 billion to 1.8 billion. That looks a lot better. Operating income increase of about 80% in that time frame. Here's something really notable here. This is what I was talking about earlier. R&D expenses. Over $1 billion annually they're sinking into research and development. Right? Significant. That's 15 to 20% of their gross profit here, 20%. It's about 20% of their gross profit they're sinking into R&D. It's what you need to see out of a company like this. Is the revenue growth particularly strong? I mean, what's interesting about Nutrien was we really saw a significant, if I remember properly, we saw a significant increase in sales due to the commodity exposure of the fertilizer prices. Even though this stock and that stock are correlated to each other, um, we don't have the same exposure there. Because this company has branded products, they are able to command a little bit more pricing power with their seed products. They're not commodities. Um, so seeing continued sales and profit growth, uh, really encouraging. In fact, if we see here, the company did 7 billion on 17.5 billion of revenue in 2022. They actually have, in the last two periods here, higher gross profits on slightly lower revenues. So operating efficiency is going up. Their gross profit margins are going up. That is indicative of the pricing power I talked to. Revenue per share. Uh, what are we? They're buying back a bunch of shares. 750 million to 700 million. What is that, like 8% decrease in float? That's pretty good. See, the earnings per share have been kind of volatile. I don't know what's up with that. We see the dividend per share growth has been pretty modest, not amazing, and the payout ratio, not bad. The increase in EBITDA, we see here 50% increase in EBITDA. That looks pretty good. These financials they pass the eye test. The income statement passed the eye test. Nothing sticks out as like wow to me, but it looks good enough. Total cash. Let's look at the balance sheet now. We're looking at the balance sheet. Steady increase in cash, 2.5 billion in cash and short-term investments. We're at 5.5 of AR, 5.5 of inventory. Lots of goodwill. Don't know what that's from. 9.2 of hard assets here before accounting for depreciation. We need to look at our long-term debt. Okay, 2 billion of long-term debt. 2 billion versus 2.5. Okay, that's good. 3.2 of short-term debt. Looks okay. Cash per share, it's more than adequate. Book value looks fine. 5.8 of debt has gone up in the last few reports. I wonder what's driving that. I think same thing on this balance sheet. They have plenty of liquidity. It's not the worst, it's not the best I've seen. Let's take a look at the valuation. Seeking Alpha gives it an F grade. 22 times earnings. Doesn't seem that bad to me. Price earnings growth ratio on a non-GAAP basis, they have is a 2. That seems on the high end. Price book, price. It doesn't look that expensive to me. I guess on a GAAP basis, the dividend yield is fairly low. Maybe it's just a growth thing. The thing about these financials is nothing really stuck out. See how the revenues kind of follow. There's some cyclicality there. We're missing December right here. What's going on? June, September. Yeah, where is December? It's kind of weird. Anyways, it doesn't seem expensive. I don't know if I agree with what Seeking Alpha is saying here. I don't see the the F valuation. I mean, maybe we should look at the dividend. Let's look at the dividend. 4.4% free cash flow yield. I mean, that's slightly lower than the 10-year treasury. It's not bad. The dividend yield looks fair. I mean, it's on the lower end of what we've seen, but I mean, since for the majority of the company's standalone history, it's kind of been trading in this low 1% range. And it doesn't look like we've had crazy dividend growth. Every year, the company has raised, when they started raising in 2021, they've raised it by a cent. So dividend growth has decelerated somewhat. They have a low-ish payout ratio. Here's the thing that I'm going to say about this. Um, there's nothing about the valuation, the growth, the financials. There's really nothing about the financials of this business or the dividend or there's like the objective measures of this business that I'm looking at. There's nothing about it that makes it particularly sexy to me. Nothing really sticks out and it's like, wow. But the thing that I do really like about it is its trading behavior. And is past performance indicative of the future? Not necessarily. But I do tend to have somewhat of a bias. I will be transparent with my viewers out there. I do tend to have somewhat of a bias for companies that exhibit this type of trading behavior because um, I do borrow against my portfolio from time to time. Therefore, it is important for my portfolio to not draw down as hard as the general market in a downturn. So, with a lot of the stock picking that I do, and I don't only invest in stocks, I invest in bonds and other assets. With the investments that I pick, I am trying to obtain growth in my portfolio, but keep the beta lower and offer some drawdown protection. So I really like this stock um, for that reason. I guess I can see why Seeking Alpha would classify it as being expensive because there's really nothing about these financials that make you say, wow, I mean, really, this is on a quarterly basis. It just kind of looks the same across the board. This most recent quarter here was the worst quarter they've had compared to this September. This September, just kind of a mixed bag. Yeah, they had a negative operating income. I think what you're looking at here with this is you're looking at a company that has maybe a lower correlation. You just have a lower correlation to the market at large. In fact, let's take a look here on Portfolios Lab. Portfolios Lab says the PEG ratio is 1.11. I'm going to compare this to VOO. Where's the right here? Correlation between Corteva and VOO is 0.46, which is considered to be moderate. Let's take a look at Nutrien. 0.52. I have picked up a few shares of this stock, along with my holding in Nutrien, along with a different company that is more of a pure play crop protection producer called FMC. All three of these stocks are correlated to each other. All three of these stocks exhibited outperformance in the bear market last time. That's why I like them. However, this company is not at some bargain price, but I think it is worth having exposure to. My headline on the article I wrote about Nutrien on Seeking Alpha And yes, I do write articles on Seeking Alpha. Be sure to follow me on there. The title of my article is Nutrien, Worth Having Exposure to. I think that's where we're at with this stock too. I like this. I like it. I like the way it trades. Is it at a good price right now? Unclear. So what is my grade exactly? I think I think it is a buy at the current valuation. It's not a strong buy. This is one of those stocks that I'm just kind of nibbling here and there, as we're edging up to the ex dividend date each time. I, I pick up a few shares here and there if I've got the capital. That's what I've been doing. I really, really like the way it trades. So I think it's a buy. However, it's not. First off, I don't deeply understand the underlying business. Okay, I will be honest with you. I do not deeply understand it. I have educated myself quite a bit about it, and it's a line of business that I really like. However, yeah, it's not something that I deeply understand. See how it's outperformed the market here over 5 years? In fact, I can't think of a single example. Have I looked at a chart where the asset has outperformed from here to here and also outperformed from here to here? This is the only asset that I've looked at. The proof is in the pudding. Yeah, you even see here strong inverse correlation over this period. It's worth having exposure in your portfolio. At least for my objectives and my goals, it's worth me having exposure to companies like this. Um, I rate this stock a buy just just based on the trading behavior of it. The financials are good. It's a wide moat and it's at a fair price. It's not a strong buy. Um, Nothing about the valuation sticks out. Let's talk about another reason why I think that this is a fair price to nibble at. Let's just look at this chart here. If you've been watching my videos for a while, you know that my technical analysis is very, very crude. So I just kind of draw lines based on the patterns that I'm looking at and draw the conclusions that I draw from them. More sophisticated traders out there, I welcome you to critique my methods. However, this works pretty well for me. Here's what I see. I see a pretty strong, just upward trend since 2019. This is the long-term trend line. It bounced off right at about a year ago. Bounced off. I mean, gosh, it went up. It must have had really good earnings because it went up about 20% in a week here. But that earning, whatever happened right here about a year ago, January 2024, launched the stock out of this kind of temporary drawdown here into a new uptrend. Where the price is now, we're bouncing off of that trend support there. Super interesting, right? Here's why I like the price that it's at. It seems like a fair price. Is this the stock that I'm looking to allocate to next? No, I've already, nibbled a small position. But look at where our price is here and look at where that puts us in the context of this kind of wedge formation that it's forming here. See, what happens is if the stock bounces here up to our trend line here again, well, either it breaks through and the next place it's going is to all-time, to test all-time highs again, or it comes back down, to which point by that time it'll come back down, in my simple brain, it comes back down to higher than where it is now by about 5%, or it comes back down to here. Seems like there's margin of safety there. Either it just consolidates its way to this point or this point. Again, for what it's worth, very crude analysis. Is this like some super sexy setup? No. No, I wouldn't say so. But I like the very clear pattern that this stock demonstrates. Again, let's just look at this. Let's look at this chart. It just trades in these tight bands, these tight windows. So yeah, I think I really like the underlying business. I like what they do. I like the way that the market trades this stock. It's the kind of stock I want in my portfolio. It has outperformed the market the last 5 years. I think that's largely due to the fact that it performed really well when stocks weren't doing so well lately. So there's a place in my portfolio for companies like this that just based on their past performance recently, nothing about the business has fundamentally changed since then. In fact, I did notice something very interesting in here. Bulls say back in the Morningstar report, Corteva's profits will see a boost from the expiration of a $1 billion annual royalty payment to Bayer 2023. Okay. That was a while ago. I bring that up to say that this business, there's nothing different about it. There's no real negative sentiment. I mean, farm input producers have struggled. This stock has continued to perform well. Again, if we look at Nutrien, I'm going to look at FMC because that's another one that I like. You see here, starting around this late 2022 period, Corteva, Nutrien, FMC, Farm Machines Corporation, all these stocks kind of performed worse than they did before. Corteva has done by far the best out of these three stocks. It has been the only one to outperform the market over the 5-year time frame. So I like the stock. If you've been paying close enough attention to this video, you'll notice that I don't have a lot of really sophisticated opinions about this stock. And when you have to understand that comes from a place of, I don't feel like I need to understand something very in depth in order to invest in it. I understand this enough to be comfortable with the risks. And that's why I think there's a small allocation to it in my portfolio. But what are the risks with this investment? Well, I think the main risk that I can think of is kind of in line with what the Morningstar report is saying of, it's really the perception risk, or the risk of anti-GMO sentiment in certain markets. Not to mention that there's like litigation risk. The company can be on the hook for damages caused to the environment, the food supply, whatever. They're in a controversial line of business. Any stock that's in a controversial line of business has controversy risks. And that's the main risk I see here. I think another risk is that it's not really priced at a value right now. So it may not perform. It may not continue to outperform the market over the next 5 years. Again, my strategy here with entering into a position is to take equity risk, but hedge equity drawdown, hedge broader, frothy market drawdown. So to me, I'm not as concerned about that. You might be. It's all, I urge you to do your own research and, make sure you get comfortable with the things that you can. But yeah, the main risk here, I think, is just really the sentiment around it. Now, everybody knows what Monsanto is. This company is like Monsanto in certain ways. They're kind of they're a competitor to Monsanto. Everybody knows who Monsanto is. Nobody knows who this company is. If this company were ever to develop the kind of reputation that Monsanto has for, essentially being an enemy of humanity, I don't necessarily agree that they are, but you understand what I'm saying. If this company were to develop that type of reputation, that would be a risk, that may negatively drive the sentiment of the stock price. Um, in my opinion, that's a fairly benign risk, and it's also very far fetched, and it's not one that you can quantify. So it's not something that I would worry about. The main thing you should feel comfortable with is understanding what it is they sell. The fact that some of the seeds are genetically modified, some of the seeds are not genetically modified, um, and that you need to be comfortable with that. This is the first video I've made in a few weeks. I feel like I've been pretty rusty today. I feel out of whack with my setup being all new. I'm looking at the camera over here. My mic's over here now, but my screen's in front. So hopefully this hasn't been a total waste of your time for my viewers out there. And hopefully you see my thought process here as it pertains to opportunities. You'll notice that my approach really does overweight how the company has traded in certain contexts in the market. Is that a very unsophisticated approach? Probably. Um, However, it has ended up, producing good results for me, over the time. So hopefully, if you've gotten to this point in the video, you find value in that approach, and maybe you have that in your portfolio as well. But for whichever reason you're here, really appreciate you watching this content. There's a lot more on the way, and if you found this interesting, be sure to like the video, comment, ask me questions. I do like to interact with my viewers. I've been very pleasantly surprised with the amount of viewer suggested companies that have been thrown my way. I still need to get through all of them. I will try my best. But I for the small cohort of viewers that I have out there, I really appreciate you. It's been fun so far. Also want to take a second to mention the fact that, yes, I do also, for every company that I analyze on this channel, I do write articles on Seeking Alpha as well. So be sure to follow me there. Check out my work if you're interested in these videos. So, anyways, it's been real. Hopefully, you found this interesting. I've definitely had a good time. And until next time, I will sign off. But it's been fun. All right. I will see you soon. Thank you for watching. Have a good rest of your day.